What is up, guys? Welcome to Hoto FX. Today I have with you guys Euro GBP. So today I am going to show you how I was able to catch this beautiful trade on the 4 hour time frame, and I'm going to show you how I was able to capture this trade. Now, before this trade played out, this was the trade before. As you can see, it was the trade before, and then now currently the trade has hit TP and we are done with the trade. So I'm going to show you how I was able to capture this beautiful trade. Now, without wasting any much time, let's dive deep into the video. Now, how I was able to capture this trade. First of all, I captured this trade using SMC strategy. In full is smart money concept. Now, I will explain what smart money concept is into another video, but today I'm going to show you how I was able to capture this trade. First of all, let me remove this so that I can show you how I was able to capture all of this. Let me just remove those. Let me just remove everything so that I can show you. Now, this was the trade. And the things that I looked at, as you can see on your left side, there are four key levels which I used to capture this trade. First of all, the first one is market structure. Secondly, is break of structure. Third, is fair value gaps. Number four is order blocks. I'm going to explain every concept or every key level here. The first one was the market structure. The market structure, we have two market structures. We have two types of market structures to say it. We have downtrend and uptrend. Now, the first thing I was able to identify was that we were involved in an uptrend. Now, what made me say that we were involved in an uptrend? As you can see, we are moving in an upward direction. As you can see, that was the first sign that told me that we are in an uptrend. And now, this was my first confirmation that we are in an uptrend. Now, market structure, check. Uptrend. The market structure, we found it to be uptrend. Now, break of structures. Since we are involved in an uptrend, which means I'm going to be looking for break of structures to the upside. Mind you, break of structures to the upside. If we were involved in a downtrend, in this case, we were going to be looking for break of structures to the downside. But in this one, we're involved in a uptrend, which means we're going to be looking for break of structures to the upside. Now, what does that mean? Let me show you. What I mean by that is break of structures, break of structures simply means we are breaking a structure. As you can see, we broke a structure here. We broke a structure to the upside, which means that the market created this high. After creating this high, it went down. After going down like that, it it continued to go up, breaking this previous high. Hence, we say it's a break of structure. It broke this high, and then we call it a break of structure. If you want, you can say it broke a previous high. In this case, it broke a higher high, previous high to form a new high. In this case, it broke a previous structure to form yet another structure. It formed another structure, it went down again, and then as you can see, it broke a structure again, forming a break of structure to the upside. Let me remove this one. After that, I marked my break of structures. I marked my break of structures in this case. That was my second confirmation that told me that we are involved in an uptrend. Now, I named my lines break of structures, break of structure, break of structure. Mind you, I'm trading on my phone. I don't have a laptop as of yet, as I am still, building my career on Forex trading. So now I found my break of structures, which was the second key level. Now the third key level was a fair value gap. A fair value gap in this case is simply means a candle which looks different from the other candles. Now, as you can see from this market, we have different types of candles. We have candles that are noisy, like here, as you can see, these candles here, they are creating a lot of noise. As you can see, noise and noise and noise. Those are the candles which are different from the other candles. Now, yeah, those are the candles which are creating a lot of noise. Now, as you can see, we have candles which are tall and they have space in between. For instance, this candle right here, it's a fair value gap because this candle is creating something called an imbalance in the market, which means the market left quickly to a point whereby it left no sellers, or it gave no sellers a chance to actually interact with the market. But don't worry about that. I'm gonna be making a video later on about explaining what are fair value gaps and what are order blocks and what are breakout structures. In this video, I'm just showing you how I was able to capture this video. And then after finding my fair value gap, in this case, I will be explaining what a fair value gap is. These candles here, let me show you. These candles here are fair value gaps, and as you can see from here too, we have another ones called fair value gaps. Now this candle tells us the market is gonna come back to them to fill the gap, the gap they have left. As you can see, this candle tells us that the market is likely to come back to them to fill the gap they left. As you can see, it came back here. Let me remove this. As you can see, the market literally came back as I told you, like these candles here, they are fair value gaps, which means they left the gap and they tell us that the market will come back and to fill this gap. As you can see, the market went down, and really it came back to balance these candles. Every time you see this candle, just know that the price is gonna come back to fill the gap. Okay, now since we know that the market is going to come back to fill the gap, the only question is, where will we find our entry? Because we know that the market will come back to fill the gap, but where can we find our entries? That's where the fifth key level come into: order blocks. Every time there's a fair value gap, or every time you see an imbalance candle, just know that it is also followed by an order block. Now, what is an order block? An order block, in this case, since we are involved in an uptrending market, an order block going to be looking at the last candle which was going down. In this case, let me give you an example. As if I can repeat, I'm saying that I'm going to be doing a video later on explaining every key level that I have mentioned here. I don't have time to explain what they are, but I'm just going to give you an example. As you can see here, we had an inefficiency or a fair value gap. As I've mentioned, that a fair value gap will always be followed by an order block. Now, since we found I'm sorry about that. Since we found a fair value gap now, and I'm saying that a fair value gap will always be followed by an order block. Now, what is an order block? An order block is the last candle which was going down, in this case, because we were involved in an uptrend. If we were involved in a downtrend, like our order block in this case was going to be the last candle which was going up. In this case, we're involved in a downtrend, in an uptrend, which means we're going to be looking for the last candle which was going down before an impulsive move to the upside down, or before a fair value gap was formed. In this case, we found our order block to be here. This is the last down candle which was going down before an impulsive move to the upside. Our fair value gap, the last down candle which was going down, followed by an impulsive move, which in this case we call a fair value gap. That's where I was able to spot my entries. I was like, okay, we have an efficiency. Number one, market structure, uptrend, check. Breakout structure to the upside, check. Fair value gap, check. An order block which was an order block which we found exactly at a fair value gap, check. Now that's where I spotted my entries. Now I said this was gonna be my entry on this one. It's gonna be my entry. I pointed this, it's gonna be my entry, and I did something like this, and then what I did, show you what I did. Let's do this. I entered from here. I placed my buy stops here. I always enter with the buy stop. I don't actually enter on a market manual execution. I always use buy stops, sell stops, and then I aimed at risk reward ratio of 1:4. In this case, 1:4, as you can see, is right there. And then but in this case, like, I actually aimed somewhere here. If I can remember, I aimed somewhere here, and then as you can see, the market really played out well. Now this was the market before, and then now this is the market currently. and today is Sunday. We're going to be looking for yet another trade. Now, as you can see, the strategy played well and the trade actually played well. We're able to catch this winning trade. Now, since today is Sunday, um uh now is the day to like analyze for the week to come. So this is how the trade played out, and thank you for watching. And be on the lookout for yet another video where I'll be explaining all the key levels I have mentioned. And if there's something you want to ask or anything, just leave a comment down below. And your support is appreciated. Leave a like, subscribe, and yeah, catch you on the next video. Stay sharp, stay blessed, and remember, uh, risk management is always the key to success, and patience plays a big role in the forex markets. Hotzo FX